Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look at the euro currency. So situation on the euro still stands tricky, and mostly I would describe the situation as indecision, because within the 2 weeks or even longer, market mostly is driven by the external factors, and investors just stand and watching on the news and trying to estimate the direction and what direction to run without any personal view on the further perspective on the euro, because when you do not know what next driving factor will hit the market and what Donald Trump will tell and so on, you're nervous, and especially when you plan some long-term trades and you're trying to sit on the hands and sit on the money and see what will happen, trying to understand when situation becomes more clear, and this makes an impact on the price behavior. Last week in the weekly report, we discussed a long-term picture on the dollar index, and potentially from the technical point of view, it looks like dollar should drop, so should be some weakness in the dollar. But currently, it's still unclear what driving factor will trigger this weakness. Speaking on the euro currency, there is critical but stable conditions, so we do not have any really shifts in the economy, in the policy, in the European Union, and it stands stable, weak currently. So there are no questions currently on the euro currency, and definitely the driving factors that could lead to rally of the euro, they do not come from the euro strength. So it means that the only way how they could come is just from the dollar weakness. But as I said, it's still unclear what particular factors could trigger this weakness in the United States dollar. Currently, based on today's analysis, we do not see any technical factors. I mean, on the charts, we do not see any clear bullish signs, bullish setup patterns on the weekly and monthly chart on the euro. That could tell us that yes, market is turning up, and it's really something is changing. On the fundamental point of view, we also do not see some really big changes in the euro background, euro fundamentals, or even more. The recent results of the elections, they are just were not hardly strongly announced in the mass media, and this information very fast were overcome by news on the Mexico tariffs and so on. But this is very important events, and in fact, the results of these elections will make impact on the European Union in a long period. It's gradually, but it will make impact. Second important driving factors, fundamental driving factor, is that relationship between the European Union and the United States is chilling. So it means that here and there we see the concern about the possible tariffs. You know probably the recent story about situation on Cuba with the assets of European companies. You also probably know about the new sequence, the collection of the sanctions against the Nord Stream 2, and that's just a few moments to mention. So actually there are more of them. So it also will make an impact on the policy of the European Union and the economy, and this is definitely not the positive factor. So it means that in a fundamental perspective, we do not see really big, some real bullish factors for the euro. So, and that is what concern stands about. So to estimate the real factors, how euro could rally, because the technical setup suggests that this possibility exists. We come to the conclusion that this should be some weakness in the United States dollar. But as I said, it's unclear what particular factors will be beyond this. So speaking in the shorter term perspective on the daily chart, we do not totally deny the chances on upward continuation, because actually market stands at the same point it was last week. And an overall picture in the daily stands relatively clear and simple. So while market stands above these lows, it keeps chance, at least on the tactical action, higher. And actually we have the same 1220, 1260 destination point as the target on the daily. Once market will break these lows, it means that we're coming to the 1050 and downward action will continue. So this balance is relatively simple. Also, it is interesting that we have another bullish grabber on the weekly chart that suggests action to the 1260 area. On the dollar index, we would not have this. Also, it's interesting to see the harmony between the price action. Take a look, just compare, guys, with two different actions. So take a look, spike here up, spike here down. This is deep retracement here. It's again the same here. Then drop almost back to the action, back to this, equal to this top. The same here, and then market turns to the opposite direction. So it's very similar action, but in opposite direction that we see right now in the market. Also, we have minor bullish pattern here. It's called the morning star. It has been formed within the 3 sessions. And by this pattern, existence also of the bullish grabber on the weekly, we could suggest some upward action here. So there are things to there are subjects to think about as for the bulls as for the bears. So bulls are watching for upward action against these lows. Bears are watching for a clear bearish setup or a breakout of these lows. So that's clear balance. So on the 4-hour time frame chart, that's actually the pattern that bears could keep an eye on. So if market will continue upward action, here's the 1223 area. Is OP target. It stands very close to confidence resistance in 1240, 1236. It already has been tested here, but it's also still this is the 2 levels that could provide, still could make an impact on the price action. It's also will be agreement. So the guidelines triple to sell could be formed, and that will be the subject to think about for the bears, depending on how market will reach them. It will be, if it will be very gradual action, slowing down, this will be not bad opportunity for trying to take the short position. If it will be very fast action with the breakout, this definitely will mean that we should not take any short position. Speaking about the bullish setups, so here we have something on hourly chart. First of all, take a look that our Friday setup is done well. So actually you can see the hand shoulders that we are speaking about hits XOP. Then it was brand by the sell. It was a bit dramatic because the PCE indicator has been released, and it will bring some volatility in the market. So actually, you can see spike up, but then the drop has followed, and it completes the brand by the sell that we have discussed on the 4-hour time frame chart. I don't know whether you were able to catch this trade, but I have missed this because it was really fast action. The important moment that we could say here is that take a look, the brand body is limited by minimal target. So it just completes 618 target. So if you will calculate the fib level here, you'll see the 618 support. And that's all. And market turns up. So brand body has not become the pattern that has triggered downward continuation. And it means that market probably keeps some bullish sentiment, bullish power on the market by far. Also take a look at the C point. We have the bullish grabber. This grabber suggests the taking out of this top. Now we need to turn to wider ABCD pattern. So actually we have A, B, C bottom. Market hits the COP. OP stands approximately the same area, 112. So very close to target of this larger pattern, 1223. Potentially butterfly here could be formed. For example, this could become steep left wing of the butterfly with retracement here. Market could form the butterfly cell that will finalize action to the OP target. So taking it all together, what bulls could do? So since we have the morning star pattern on the daily, it should not be very deep retracement down. So I suppose that this will be somewhere 1150. It will be normal. If we will get guideless triple to buy, it will be advantage. So some moderate retracement back in the body of the pattern should happen, and then market should turn up again. Potentially, we could get a deep retracement. For example, this could be A, B, C, top, D action below this area. But this deep kind of this guideless triple to buy will be not quite rational if you'll take a look at the daily chart. So just imagine big black candle right back down. So, well, theoretically it is possible, but it will be not in nature of this pattern. So more naturally it will be if a market will show gradual minor ABCD somewhere to 1150 and then will turn up again. So that's the setup that both could keep an eye on. Initially it would be better to place stuff somewhere below A point, but at least if you can't place it here, try to place it at least below the C. So in fact, in 2 words, the task of the bulls is to catch long position as close to the C point with initial stops below A. If it will be Gartner's triple to buy, that will be some more assistance to us. And just wait and see what will happen. So currently it depends on what market behavior it will show and whether it will be able to hold above the lows. So breaking the lows will mean the downward continuation. So that's what we see on EUR right now.